What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the setup that would allow us to take these two trades resulting in 4R and 6.8R in the London Silver Bullets hour. I'm going to split the video into two parts. First of all will be the analysis for the traditional Silver Bullet entry as I would normally trade it, and secondly I'm going to break down the Failure to Displace scalping model just to see if there are any entries available to us using that system. So let's start on the 15-minute time frame as always, marking out our session highs and lows and the previous day's range as well. So we can see previous day's high is our ultimate buy side liquidity, which was put in New York PM session. Friday was obviously NFP. So we had a very large range on Friday with a big bullish pull up. Sell side would be the New York low for our initial sell side. So as we can see from this, we are in a premium of this range at the moment, kind of consolidating at the very highs. More locally, we can see this morning, Asia has put in these relative equal highs, but has been unable to take the previous day's high. Quite bearish because we are breaking away. We can see that London has broken below the Asia low and is driving further away. So we have broken this low. I'm going to mark this as our failure to displace. We have not been able to displace back inside the range, so we are currently breaking away from the range. So this gives us a bearish bias at the moment. In London we have, however, put in relative equal highs here. So we do have some liquidity here for a potential liquidity run to fuel further downside. Possible areas of rejection if we do start breaking lower, we have this 15-minute fair value gap to be aware of. So I'm always looking at first of all, the open of the fair value gaps, and more specifically the 50% of the fair value gaps. We don't want price to be closing below 50% if it's going to be reversing. And then likewise, we have 15-minute fair value gap in the Asia session as well. And also this 15-minute fair value gap at the Asia low. Now that's more or less been filled. This one it's just been tapped once. Now what's nice about this one actually is we do have liquidity inside the fair value gap. So we've got these relative equal lows below it. As buy side, but then we do have a swing high inside it as well. So quite a lot of liquidity here. Sell side currently would be our London low. So those are the kind of levels that I am interested in. Let's just take a fib from today's range and see where we are. Obviously we're in a discount at the moment. So for sells, ideally we want to be in a premium area. What's interesting is the optimal trade entry, so the 62% retracement to 79%. Falls within these really nice levels of liquidity. So that's just something to keep an eye on. If we do get a pullback in that area, we could be looking for our short buyers to take us lower back into a discount of Friday's range. So because we are overall in a premium, we're failing to break back into the Asia range at the moment. I'm going into this with a bearish bias, so I won't be looking for bullish setups. I'm going to be looking primarily for short trades. Let's drop onto the 1 minute and see what we get offered in the session. So you can see at the moment we are making lower highs, higher highs, lower high, higher highs. So we're kind of building bullish momentum going up into this high. So we could potentially see a run up into this high now, and then we just need to see what kind of a reaction we get for a reversal to try and take us down to the low for our short bias. So initially a really strong reaction driving to the high. So that's the open of the Silver Bullet hour. We've taken the high, closed back in the range. Closing back underneath the Asia low now, so this F2D level is our Asia low. Just rejecting off that, no bearish fair value gaps at the moment. So back in the Asia range now, displacing in the Asia range. So what's going to be key here is how we react at this 15-minute fair value gap and liquidity levels, which we've already established are at optimal trade entry, which these two light grey lines we've just tapped optimal trade entry now. I'm going to delete that because it's cluttering up the chart. So we've taken the first level of liquidity, taken the second level of liquidity, and what's really interesting is we've stopped exactly on the 50% of that 15-minute fair value gap. Filled it, so just underneath the top of the fair value gap, but closed again exactly at 50%. So this is telling me that this fair value gap is a significant level for us. We've taken buy side, we are respecting the 50% of that 15-minute fair value gap. Okay, that's nice. So price is pulling back inside this range now with a big bearish engulfing candle. So we're seeing some displacement down. Not so strong on this following candle, but we do have a balanced price range here. So let me just get rid of this liquidity levels now because we're closing back in. So this fair value gap, we had a bullish fair value gap coming up and a bearish fair value gap coming down. So where the two overlap is our balanced price range. Let's just highlight that. I would take that as a short entry if that gets tapped again. So that would be a short entry for me if price comes back and taps that level. Stop loss would be a 5 pip stop loss, 5 pip take profit in this instance. Okay, so price is driving away, so it hasn't tagged the balanced price range. We've left another fair value gap here and another balanced price range, in fact. So we have an overlap here. So we have a secondary balanced price range below that low there. I would follow this down now because my ultimate target is taking us at least down to that 15-minute fair value gap. In here, eyes are drawn on these relative equal lows. Actually, look at that. We'll fail to spot those. So we've got a lot of equal lows here for sell side. As well as sell side at the session low, we've built up liquidity here. So there's quite a range of sell side liquidity there into these fair value gaps. So that could be a potential draw. So this is our silver bullet entry now, aiming to take out some form of sell side, 5 pip stop loss, which is just above the high, which is quite nice, and then a 5 pip take profit, which takes us into this order block, filling this fair value gap. Let's see what happens. Nice, so the balanced price range is tagged. We are rejecting away. Again, balanced price range holding. Price pulls away. Left another fair value gap here. And that's our 1-to-1 hit, so that's our 5 pip take profit done. Ultimately, we would expect these lows to be taken out, which gives us a nice 2.4 to 1. Oh, very close. So basically zero drawdown here. Price is just driving towards these equal lows. And now it's teasing us. I hate it when that happens. It's taken the first swing low, but it's left the other two. Okay, so we're pulling back. We're into this order block. So it's just kind of consolidating now above this. This is just building liquidity here though, to be fair, so you would expect this to be run. So although it would be very frustrating that profit hasn't been hit, if you're watching this, you can see them just engineering liquidity. The more liquidity they build here though, the bigger the reaction you would expect from this level. And we've taken the liquidity, so we've swept the liquidity, closed back inside the range, and that is your silver bullet trade for the London session on EURUSD. So really nice simple trade. Come back, respected the 15-minute fair value gap. There was no opportunity to get along there. and I did have a bearish bias anyway, expecting price to come lower given the fact that we're in such a premium at the moment of the previous day's range from NFP. Let's go back in time now. Part 2 of this will be to look for our failure to displace entry models. So we've got relative equal highs here. So from this would be a session high, so potentially you could have taken this as a failure to displace above that high. Very aggressive entry, so this is where you need to help refine this system. This obviously didn't pull back. There was a potential entry there, so you would have had a minimum of 1.5 pip stop loss, 1.5 pip as your 1-to-1 RR. So we'll take 50% off at 1-to-1, making us risk-free. This just gets ran through, so we didn't hit our 1-to-1, so that would have been one loss on the failure to displace model. So we're now going to be looking for our next level of significant liquidity, which would be relative equal highs here and into that fair value gap. So I'm ignoring the high here, because well, we've got one swing high here, and then the next gap time high is actually here. So my thought process on the failure to displace model is looking for session highs and session lows, and I'll also consider gap time, which my gap time levels are in between the sessions. So Asia ends here, London starts here. This is the gap between the two. So the gap time high is here. So that will be my next significant level. So we'll look at gap time highs as our next level for a failure to displace. I'm trying to eliminate taking hundreds of trades in these choppy ranges. I want to be taking my trades at the extremes. We didn't take that high anyway. We have taken that high, but we've not closed back in the range, so there was no trade there. Taken this, closed on the range high, so there's no trade there. We want to close back in the range. We've taken this out, respecting the 50%. Wick respecting the 50%. This is a trade I did take live, so this is a closure back in the range. So I took an entry for myself, the close of this with my stop loss above this high at 3.3, risk free at 3.3, so 50% off at 1-to-1. So my basis for this was understanding that we had this fair value gap. I saw the 50% was respected perfectly, and we'd closed back inside this range. So I took an entry here, so very aggressive. Price obviously tagged us in because I'm entering at market, slight pullback. Drove to the 1-to-1, so I was risk-free after 3 minutes on this trade, and then held the rest to take out this low for a 4R trade. So the idea of this, again, let's just mark that as a failure to displace. That was the level I was eyeing. We'd pulled up, we'd taken the liquidity, and then pulled back almost immediately and aggressively back in the range. So we had an aggressive pull out of the range, an aggressive pull back in the range, leaving our balanced price range. That was the entry there. Now, strictly speaking, from my previous video, I said it had to happen within 2 candles, which that wouldn't have been an entry. But because it was aggressive, I did take it. So again, I'm still working on this, trying to figure out the best way to trade it. That is an entry that I did actually take. And as we can see, price did come down. Building liquidity at the bottom of here, which is where I began to eye up again another failure to displace entry. When we saw these 1, 2, 3, 4 pushes into this level, this was a reversal entry, so I took my take profit there, saw this close back in the range, I didn't take this particular candle because I was too slow, but when I saw this candle, bullish engulfing candle, it's essentially the same pattern as we saw at the top here. Pin hammer engulfment over a significant level of liquidity, in my opinion. I took this long. Stop loss was below the low for a 2.9 pip stop loss. 2.9 pip was the 1-to-1. So again, with the failure to displace model, I'm entering at market as soon as the candle closes back in the range. I'm in the trade. Again, risk-free after 1, 2, 3, 4, 5 minutes. We were risk-free on this one. Then ultimately holding this, expecting to take the high. This is just general range trading. We've gone from one liquidity sweep, so we're expecting opposite side of the range to get taken now, which is this high. So we're outside the silver bullet hour now. Oh. So just going to mark that as our failure to displace, because that's where we failed to displace below these equal lows. Go to the buy side. So we've respected that fair value gap, and then we take out the high, which is our 4.9. Now ultimately we got the relative equal highs that we highlighted on the Asia session. So this could have been a take profit, running this to take out the daily high. And then again we've got previous day's high above us if it wants to run that high. So if we were holding this, we do eventually take the Asia high on there for a 6.3R trade. So using the failure to displace model, we would have had one loss because that was a session high, but that didn't yield the results. Then we would have had one win, 4R, and a second win at 6.3R. Again, I appreciate this is very discretionary because we are having to choose the right levels of liquidity. So in this process, I'm just trying to refine where I would take those entries. And at the moment, my plan is to look at session highs and lows, gap time highs and lows, and obviously seeing these build up of multiple touches of a specific level, we can see this visually that this is a significant level of liquidity as well. And what I'm trying to avoid is just taking every single swing high, swing low break and closure back in, because that can lead to over trading, and it can lead to, again, psychologically just getting exhausted trying to manage so many trades. So that would have been the 3 trades on the failure to displace model, 2 wins, netting you 10R basically, and 1 loss. So 9R would have been the actual profit from that session on failure to displace. I hope that was useful, guys. I hope breaking it down into 2 separate sections was useful as well, because I did get some feedback from the previous video saying it was kind of confusing when I was doing silver bullet and failure to displace scalping in the same one. So splitting it into 2 separate sections, I'll try doing that moving forward. Again, these videos are mainly for my reference. It's to try and help me clarify what I'm looking for in my trading. So I do apologise if sometimes it doesn't make 100% sense to yourself. But leave any comments down below, any questions down below. Give the video a thumbs up if you did find it useful. And do please consider subscribing if you want to see more content like this one moving forward.